Alright, so this is training video 12, trading round levels for support and resistance. This is Matt Shaw, Chief Analyst, Knightsbridge Trading Academy. Okay, so here are some examples purely of round levels being very, very important to the technical charts. Now, by round levels, what I mean is for FX pairs, typically every 100 pips you get 130, 131, like for instance cable you get 127, 128, 1.28, 1.29, 1.300, 1.31. So it's obviously, as you can see, it's $1.28 for every pound, $1.29, $1.30, $1.31, $1.32. So in between it's 100 cents if you like for every 100 level. And then of course you go deeper and you go further back and you can see that the markets, let's go over say a weekly time frame, you can see markets one time back several years ago in 2013, 2014, 1.7, 1.6, 1.5, 1.4, now we're down to 1.3, just over 1.35. So that is 1.7 to 1.6, 1,000 pips. So you've got 1.61, 100, 1.62, 200, 1.63, and so on and so forth. So every big number is 1,000 pips, and that's the level where I'm sort of looking at, talking about. Every 100 pips it can be very meaningful, and I'll show some examples. But specifically, every 1,000th pip is crucial. So, for instance, now on pound dollar, if we were to get back up towards 1.4, you can expect some great resistance, because we were there not too long ago before we broke down through back in May, just before Brexit, actually just in June I should say. As you can see, we sold down through 140, 142, 139. You can see there the market sold right down through 144, 145, down towards 135 to where we are now actually. And right now cable is in fact right on sort of this neckline here that it was once just after Brexit. But anyway, coming back from that, there is particularly right now a support and the breaking of resistance that we're going to look at actually. This was indeed right now temporary support for pound dollar back last year, this time last year actually, and now you can see we're back above that. So what did we do to break back above the 130 level? Well, let's go back here and just see how much of a resistance 130 was. So since we broke down through this level in October 2016, we broke down 130, the market actually dipped all the way in the flash crash below 115, and since then we've recovered. And the market's recovered up to the 120 level, 125, and then recently in May, June, all through the summer, the market's really attempted, look at this, several attempts to break 130. First attempt was made in middle of May. It just tipped over 130, sold right back off down to 125. Tried again, back off, tried again. Got above it in July, started the summer holidays. Very briefly went above for a few days, back below from 132 down to 128. Now, since then, it's built up more of a cluster, if you like, of trade, and through August it's built up, and with the momentum over the last few weeks we have seen a push up through 130, and with some good news of the BOE and the market taken very kindly, the market has indeed right now moved up towards that 136 level and has consolidated just below 135. So we've seen a push up through, again, other contributing factors helping this up through, which we run through on the trading days, but round level being very notable here in this setup. And the setup is quite frankly a breakthrough 130 that it's tried for the last several weeks and months to really penetrate and really get up through. We have some confirmations of those consecutive candles pushing up through it, especially on the 15 and 30-minute chart, and we have seen higher ground as a result, and could last for some time, especially up towards that 140 level. Again, the next 1,000th level could well be the target. Let's go back on Euro Pound now. There's an example on here I want to show you of where it broke. Now, all through the summer, the market has indeed trended upwards, all towards this 0.9 level. Now, the market broke 0.9 in the summer holidays through August, before topping out 0.93. Again, 0.93 is a round number. It's 9.3. Just like 90, 9.1 is 100 pips, 9.2, 200 pips, 9.3, 300 pips. So again, it's not a 1,000th level like 0.9, 0.8, 1, 1.1, but it's a 100th of a round number. So again, quite notable, but it stopped bang on 0.93. But again, look at this, making its way back down to 0.9. And then look what happened when it got to 0.9. Precisely, it absolutely fell through the floor. Again, typically, because it's such a strong level, 0.9, a 1,000th level, as you can see here, 0.9 just below there. I'm making that a bit thicker just so you can see. A thick red line is 0.9. Extremely crucial. And what happened there? Absolutely sank through 2 consecutive candles, even on the 1-hour chart, and again sold right off down towards 0.75 and continued the trend lower into the last few days, the last few hours actually. So, Euro Pound, again, let's check another one, Euro Dollar. Again, Euro Pound right now, again, struggled even when pound against the dollar's come off. Pound is a bit weaker recently. Again, it's still seen extra weakness in Euro Pound because typically 0.9 was a high sentiment level. And this, having broke that, all the sellers was then attracted to this level. All the sellers was here looking at 0.9 for support, because obviously after it broke above this level earlier in the summer, right here, early August, the market now looks at this level here, the red line, 0.9, as potential support. Now the market has sold back off down below this level. All sellers think, right, there's no support there, let's just get out, let's start selling euros and possibly buying pounds. That's what happened. Again, let's go back onto Euro Dollar, the one I was just about to go on. Okay, there's one here. Up to the present time, again, 120. Look at the work the market did in getting up to this level. Up to 1.20, sold off, bottomed out around 118, back up to 120. Now that red line is roughly 120. There's a nice cross there. So that thick red line is 120. I'll do one more just to make it as clear as day. Right there, market rally back up towards this 1,000th level again, 1.1, 1.2, 1.3. That's a 1,000th level, 1.2, very significant, huge round number. A lot of central banks take notice of the euro dollar at this level. It's the most liquid pair in the FX market, euro dollar. And look, just spiked up before FOMC earlier this evening and sank through it. And not only sank through it, absolutely got pummeled, sold off 150, nearly 200 pips from top to bottom. And again, once the market sold down through here, again, sellers rushed in, no support there, no support for 120 as it was trading just about 120.10, 120.20 before the announcement. No support they were seeing, so people just got the hell out. All participants just flung their euros to the side, got back into more dollar, but again, euro was left behind against the dollar. Just like other pairs, just like the pound was, but euro absolutely did suffer at this round level. So again, it's often the case, just like you can actually sell through these levels, just like you can sell through the wedges that we just spoke about, you can also look to exit these points if you've enjoyed the run-up to these levels and you've been long. If market tends to be, well, if in fact quite apprehensive or tentative at these levels after such an enjoyable rally, you can look to say, right, any hint back below the round level, I'm getting out, that's my exit. And that's quite a sensible option. It happened here, and pretty much this is the outcome. So other than that, guys, that's pretty much it. There's also one for gold. There's a bonus one here for gold. Let me get that. Very recent one, I should say. Just check out here on gold what we saw at 1200. Now I've already put this in as the red line. I think we'll call it the Trump floor. Again, look at this red line. Huge resistance, great support, and again, sold off down to these levels several times, and it's 1200 again, 1000th level. Yeah. In terms of pips, obviously, in terms of round pips, it's every 100. You're going 1000, 1100, 1200, 1300, 1400. But if you're in terms of pips, because you're counting the fifth digit as well, between each gap, 1100, 1200, you can in fact make 1000 pips. So there's a lot of money to be made if you can get into the right levels. But again, just be aware that every round level, 1200, 1300, again, we've just seen some stiff resistance at 1300, and markets has just come back off, and it's holding on to this 1300 level. That's interesting again. But just look at this 1200 level. Was seen as great support, and especially here back in July, bounced off perfectly just above 1200 to rally on back up towards 1300. That's where we are now. The market's actually rallied 1360 in the last 2 weeks and has now come back off. And where is it resting? After the FOMC and after a huge rally up? Well, you guessed it, the current price is precisely 1300. The market is just nestling. On September the 20th, 9:30 at night, the market has decided to rest right on 1300. That's its new support. 1200 was its support. After it broke up through this level, it's now support. And after breaking up through 1300, the next resistance after 1200, now it's become support once again. So will we see a continuation through, or will we see a bounce off this level? Again, we run through all these points in the training day and the masterclass. Let's look forward to seeing indeed what happens there. Thank you.